Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, post starting the session on a very strong note and achieving a new record high, Nifty faced intense profit booking in the first half, leading to the index testing the levels of 22,340 zone and subsequently traded choppily for a large part of the day before gaining traction in the last 2 hours to form a fresh lifetime high on a closing basis, that is. So it was an extremely volatile trading session that the markets witnessed in trade yesterday. Much of the gains in the frontline indices can be attributed to HDFC Bank, which was up over 3% for the day. Nifty mid cap and Nifty small cap indices gave positive closing for the 9th and 10th consecutive time, along with the market breadth for the three indices displaying a mixed picture of 1:1. Among the sectorial indices, if we see, Nifty Private Bank was the best performing index due to the outsized performance in HDFC Bank, while Nifty Oil and Gas was the worst performing index with over 73% of its constituents ending the day in the red. Coming to the update in the global markets, first a look at the macro factors. The dollar index, after forming a swing top of around 105, has cooled off a bit to levels of 104.20, while the US 10-year yields too have been trading around 4.3 since the past few sessions. Brent crude oil prices currently trading at a 5-month high of $91 a barrel could be a cause of worry from an Indian perspective, given the way the USD INR has been trading at elevated levels as well. The March non-farm payroll report is due today from the US. The US could be a crucial data point to track, with it being an ingredient for the Fed decision making with respect to interest rates. Reason being, a too hot jobs report could further strengthen yields and continue its pressure on the Fed to maintain higher interest rate regime. We feel that from Nifty standpoint, that is, that while these global variables are placed at a crucial juncture and in the run up to the general elections, it is important that we keep leverage under control, keep positions hedged wherever possible, and mainly focus on large cap and select mid cap counters. Coming to Nifty, indices are in an overall uptrend, and hence the stance remains to buy on dips with a slight caution. Going forward, with the strong support lies around 22,340, 22,360, and the zone of 22,530, 550 will be the immediate hurdle for the index for the day. Any sustainable move above the levels of 22,550 will lead to an extension of the rally towards 22,670, 22,720 mark in the short term. While on the downside, if the index breaks the levels of 22,340, it could lead to further selling pressure towards the mark of 22,250, 22,210 levels. Nifty PCR is currently at 1.02. Meaningful call writing is witnessed across 22,500, 22,700 strike, while significant put writing was witnessed in 22,500, 22,300 strike. The overall range for the coming few sessions could be 22,640 on the upside and 22,280 on the downside. Bank Nifty, with the top Bank Nifty constituent, that is HDFC Bank, coming into top gear, the sentiment going into the RBI policy has been positive. So today we have the event, that is the RBI governor statement on the policy rate action. So that would be the major event to watch out for in trade today. Till the time the index holds above its crucial support placed at 47,650 post early morning's week opening, it could recover back towards 48,250, 48,320 levels. Any sustainable move above the levels of 48,320 will lead to an extension of the rally in Bank Nifty towards the mark of 48,500, 48,700. If the index slips below the support zone of 47,600, it will lead to a bit of selling pressure in the index towards the mark of 47,250, 47,100. If you look at the Bank Nifty PCR, Bank Nifty PCR is currently at 1.04, Significant call writing is seen at 48,500 strike, and on the put side it is majorly seen in 48,000 and 47,500 strike, implying a broad range of 47,600 on the downside and 48,400 on the upside. Coming towards stocks in momentum, so if you see the likes of Maruti, Ipca Lab, Adani Power, Policy Bazaar, CESC, Zomato, Deepak Fertilizer, Hudco, LTTS, and Hon Auto, these are the counters which are looking good based on technical parameters as well as the relative strength chart. Coming to the FII DI data, in the cash market, that is, both FIIs and DIs were net sellers yesterday to the tune of 1,136 and 893 crores respectively. FII long short ratio for index futures is currently at 42.96 on a net basis. This as they sold about 1,871 index futures. On the stock futures front, if we see, FIIs have sold to the tune of 77,445 contracts, while on the options front, FIIs bought 61,576 call contracts and they purchased 10,968 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.